Well, g'day there traders and friends, market participants and enthusiasts right around the world. A quick market update as we round out the week. We are transitioning into Friday's trading session. A relatively interesting market. It was a little bit slow to begin the week. However, we have seen a pop to the upside. Now, just a few pieces on this pop and really what you should be looking for as in terms of market confirmation. I've been making the distinction between the industrial average and that of the transportational average. Here we are. We have just closed up at new all-time highs. And we also have the transportational average, if I can bring this chart up for you, also pushing up to new all-time highs. So we have effectively seen essentially Dow theory confirmation in terms of the transportational average and the industrial average confirming each other. Now, this is fantastic for those of you who are still long on the markets. This is more so fitting into the macro and the intermediate time. Also now, we are starting to get a little bit of confluence on the minor level, which is very good for those wanting to position themselves into long-orientated trades. What is interesting to note, and really the final piece of this jigsaw puzzle, this is what you need to be alerted about. We have the S&P 500 again coming up very close to this little swing high which we established in mid-June 2017. But what is interesting to note, and this is really where you should be focusing your attention if you're not already in the market long on the industrial average or the transportational average, is that of the NASDAQ. The reason for that is because we have seen a gap develop between Tuesday and Wednesday's trading session, very similar to the gap which again set up or at least announced itself in about mid-June over here. If I can just illustrate this on my chart. Now, what often happens is when we see these gaps, they do often fill. And what's interesting to note between these, or at least pick up on some, I guess differences between these markets, is that the NASDAQ essentially is still range bound. We've got this really nice defined support level coming in just above 6,000. We also have this really well-defined resistance area coming in just above 6,300. Now, this gap right here is a little bit, I mean, we don't know what type of gap this is at the moment. Whether or not this is going to be some form of a continuation or measuring gap, that would be very bullish. I mean, we don't have to come down and close this gap. However, if we come back up into this resistance area or very close to where we currently find ourselves trading, and we start to see again the formation of bearish candlesticks, or at least early reversal warning signals, well then this open window, which again we have established around 6,200, may very well be filled before we see the true breakout continuation of these markets higher. Again, when we come up to these historical new all-time highs, you have to expect added volatility. Now, we've had the X, so to speak, on the chart of where we are going to, of course, react to current price action. This is sort of happened a little bit more quickly than what I was first expecting. That's all well and good, though. It doesn't bother us when we see price action move above or below certain levels. Really, we're just waiting for price action to confirm. But again, in terms of market confirmation, we're obviously heading into earnings. I mean, a lot of these tech companies, Apple, Amazon, Google, just to name a few, Netflix too, they are all reporting earnings over the next 1 to 2 weeks. So this is all obviously going to have an influence as to what happens up and around this pivot up here at 6,320. But please, at this particular juncture right now, think about this open window relevant, or compare it against, of course, the confirmation that we're seeing in the industrial average and that of the transportational average too. It's very, very important because again, there's no guarantees that the NASDAQ is going to break above this pivot. I think it's going to be largely driven by this recent round of earnings announcements. It's going to be very interesting how a lot of these individual shares sort of react to those earnings calls. And that's going to have a big significance across all of the three widely followed US indices, but also, again, the transportational average and the Russell 2000. Just to close on the Russell 2000 as well, you can see that we are still up and around this historical high. We're on the precipice of breaking out. We have an upper wick which established itself on Wednesday, which is something to note. We do have another upper wick, very similar to what we saw towards the beginning of June. And on top of that, we do have another hangman type of candlestick at resistance. However, we're still moving sideways. So it is constructive. We're still holding above the long-term simple moving averages, also the exponential moving averages. And again, if we go across the board quickly just to show you this, the ADX is beginning to turn up. The CCI is still very healthy. If I show you this also on the transportational average too, you can see the CCI, it's printing up at 191, which is fantastic. We have had a little bit of a slowdown, but again, that's been expected, and I spoke about that during the week. The ADX has turned down ever so slightly, but this is still in a sort of a resting type of zone, but price action is still pushing up which is very, very nice to see as well in terms of confirmation of a legitimate breakout. You can see the same, the Dow Jones Industrial Average, the ADX is resting, however the CCI is still very, very favorable for the bullish outcome and the continuation of the bullish advance higher. The CCI, again, here on the S&P, it's printing very, very nicely. The ADX is reset, and to finish with the NASDAQ, this is a little bit different. Only have we just pushed up into positive territory or above that positive 100 reading, but the ADX has turned up as well on this most recent bullish advance. We didn't see the pullback down to the green box. However, all of these markets are still looking quite healthy, and it is quite an exciting time leading into the week upcoming, and also once we move through earnings season in our top 12 individual trade list, because we're going to have a plethora of trade opportunities given, of course, those gap outcomes, depending on the direction of those gaps, and to see whether or not a lot of these bullish trends, or at least these short-term resting patterns throughout our top 12 individual trade list continue, or whether or not we're going to see some reversal gaps off from some of these historical resistance areas where the markets currently find themselves. So be careful. I'd say be delicate on Friday's day's worth of trading. However, be prepared, for the breakout if it does eventuate on Friday. If we see a legitimate move and a close above these levels, things looking really healthy for the market moving forward. So on that note, everybody, enjoy your Friday, enjoy your weekend. I'll be back with you next week in next weekend's, or not in next weekend's update, but during the week next week. If not, I'll catch you tomorrow in that pro analysis class. All the best, everyone. Enjoy your weekend. I'll be back with you soon. All the best. Goodbye.